Hey, what's up, hodlers? Let's talk about what's happening in crypto world today. So you have prices holding quite steady despite the negative news coming from the U.S. Senate regarding the infrastructure bill that has the cryptocurrency amendment to it that the industry is pushing back against. So Bitcoin is still trading in the mid $40,000 range. The way traders see it, there's a resistance level at 47,000 where a lot of sell orders are building up. You can see that on the blockchain. So that's going to be a resistance level that Bitcoin is going to have to push through if it wants to make higher highs. And you have Ethereum, which is also trading in the $3,100 to $3,200 range on the heels of the EIP 1559 update. So the biggest news is the crypto amendment to the infrastructure bill. So just as a bit of background, there's this huge infrastructure bill. It's over 3,000 pages long, over $1 trillion in spending that the government wants to pass. And last minute, a group of senators got together and put in an unrelated amendment into this huge 3,000 page long bill that basically put very high requirements on Bitcoin network or crypto network participants to report to the IRS. So a separate group, a pro-crypto group of senators, came out with their own proposal that was more crypto-friendly. And within the last 24 hours, these two groups of senators actually reached an agreement. So really rare within politics to reach an agreement so quickly. The compromise was even supported by the head of Treasury, Janet Yellen. So quite powerful backing. Nevertheless, it didn't get passed. It didn't go into the bill, this compromise, for procedural reasons. So apparently there was a Senator Richard Shelby. He was the only person that objected to this compromise amendment for completely unrelated reasons. So he had a separate amendment. It's getting complicated now, but he had a separate amendment that required $50 billion in military spending, which didn't make it into the bill either. But without his amendment getting accepted, they basically couldn't get him on board for this other unrelated amendment as well. It's kind of screwed up, unfortunately. It's how politics work. But what's happening now is that the original language, the crypto unfriendly language, is going to be in the bill and it's going to go to the House of Representatives to be voted on. So that's bearish, obviously. However, it doesn't seem to have really impacted the price so far. So the other bit of interesting news is how the makeup of the market participants is shifting. The entire structure is starting to shift. So there was a headline here saying that large hodlers accumulate Bitcoin below $50,000 as the Bitcoin transactions over $1 million in volume begin to soar. So that's interesting because they're talking here about institutions not having left the Bitcoin market even when faced with a 50% breakdown in price has happened since May. And this is shown by the data provider Glassnode, which is interesting because with this, what they're saying here is that with the shift towards more institutional, larger investors entering the space, it also has an effect on the type of transactions and obviously the structure of market participants. So they also have data to back it up. What they say here is that the blockchain analytics platform, meaning Glassnode, reported this Monday that the dominance of Bitcoin transactions above $1 million has more than doubled since September 2020, from 30 to 70% of the total value transferred. So what they're saying here is that whereas just a year ago, the transactions on the network above $1 million were just 30% of the transactions volume, that's now gone up to 70% and shows that possibly the majority of transactions taking place is being done by institutions and potentially larger or high net worth individuals and family offices. And they have a nice chart here to show exactly how that looks. So the turquoise colored area here, that's for transactions or transaction volumes above $10 million. So that's gone up steeply in terms of dominance. And then above that, you have smaller transactions, even between 1 million to 10 million. So counting these two together, you get more a market dominance of around 70% for transactions above $1 million in volume. And then finally, as part of the same article, there was another interesting tidbit there that describes or gives an idea about the shift of market participants. So the first bit of the article talked about a shift from smaller investors to more institutional or even high net worth individuals that are making larger transactions in terms of volume. So that's one trend. The other trend that the article continues to talk about is a shift from short-term holders to long-term holders. So what they look at is a long and short-term holder supply ratio. So generally, if you're shifting from short-term to long-term holders, that's a very bullish sign. I don't know exactly how they define those. If memory serves, I think a long-term holder is anybody that holds crypto or Bitcoin for an excess of 6 months, or it might even be 9 months. And if they come out on the other side of that, not having sold their position, they turn into long-term holders. So if you just take the last 6 months for an example, if somebody held through all of that volatility and market turmoil, that's a very bullish sign. And the idea is that the more short-term holders you convert into long-term holders, that's a boost for the price. So what they say here is that the long-term holders reached an all-time high of 82.68%, which is again, it's a local high or an all-time high rather, and you have the short-term supply or the short-term holders which continue to decline and are now hitting 20%. So they have a chart here that kind of shows this trend. So you can see here the black line, that's the price. The blue line is the long-term holder supply ratio, and as you can see, there's a general trend for this blue line to keep going up, 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 and up. During the small bear market that we had here after the China crackdown, you can see that the long-term supply was at a local low because a lot of people sold off, but that's now starting to climb back up. And equally, you can see here this pink line, that's the short-term holder supply ratio. That seems to be in a downtrend. So that's quite interesting. That's it for me. Thanks for watching and see you next time. Bye-bye.